really interesting, and one of the things that I took away from it is this spread of performance between the Dow Jones and the S&P 500. The Dow Jones, as most people know, are just 30 stocks. The S&P 500, Standard & Poor's top 500 companies. So it's a bigger basket, but they really do track along, and they have for many, many years. Now we're seeing a divergence in performance.
That's right. And the biggest differences between them are really driven by the specific names in there. And this is where I think it can be a healthy reminder as to what diversification can bring to the table for investors. There's this old saying about how the only free lunch in investing is diversification. And the idea is that you spread your investments over a large number of names. So if anything happens to one of those names, it doesn't necessarily take down the entire portfolio. So the Dow, being the 30 blue chip companies, there is a company in there called United Health, and they reported earnings that were very underwhelming. It's interesting because a couple of weeks ago, they did well when the government announced that they were going to be improving the reimbursement rates for like Medicare Advantage. And apparently they're still maybe losing money or not making as much money on Medicare Advantage patients as what investors were originally thinking. So their stock really dropped. And so it's a much smaller part of the S&P 500. So it was weighing on it a little bit, but it was very evident in how the Dow was performing.
That's for sure. And we're going to continue to watch that performance and see if that divergence continues. Let's talk about policy because there's so much on the table there. Obviously, when we talk about trade policy, that's something that is self-inflicted, if you will, and we can control that, we as the people, as Donald Trump, I should say. But the second is monetary policy, and that's really something that Mr. Trump can't control directly, but he certainly made news on Thursday morning when he said Chairman Powell's termination can't come soon enough. And I guess that was looked at as a bit of a threat. But here's the reality. He cannot fire the chairman of the Federal Reserve.
That's right. And so his choice of words there would suggest, well, termination, that's when you fire somebody. But Chair Powell's term as the chair of the central bank is up in May of 2026. So perhaps it's more a
about
reference
a year away.
Exactly. And there is a lawsuit that is currently going through in terms of what the extent to which the president has the authority to terminate certain individuals' terms in office, but it's highly unlikely that he would be able to do that with Chair Powell himself. Not that he wouldn't want to, because on Wednesday, Chair Powell was speaking at a conference, and I don't think President Trump... Yep, it was in Chicago. President Trump probably didn't like what he had to say, because what the message from Chair Powell was twofold. Number one, he was asked, is there a Fed put? And maybe we can get into that. And he just said no. It was very short. But then the second question was about tariffs. What's going to happen? He's like, look, these tariffs that were announced, much bigger than anybody was really expecting. So the economic effects are likely to also be bigger than anybody's expecting if they do go into place. That's kind of a key thing, if they go into place. And then he was asked to clarify, well, you guys have two mandates, maximum employment and stable prices. And with tariffs, if it reduces employment, so you see the unemployment rate go up, and if it increases prices, so it increases inflation, that's kind of going against both of your mandates. And are you going to prioritize one over the other? He hinted that they would be more focused on inflation as opposed to growth. And the markets really didn't care for that too much. They kind of sold off a little bit. It came across as being somewhat hawkish.
Yeah, and that's really deer in the headlights. Unfortunately, that's where they are right now. And that is because the Federal Reserve looks backwards. They don't look forward. And so if you look at inflation, for example, we had a really good inflation report showing a reduction in inflation across the board. In fact, it was deflationary in some aspects, right? We saw energy prices come down. Obviously, eggs, the big story about eggs, prices came down. And the second thing that they look at is the growth number is interesting as well. So they are in a difficult spot. I do agree to that. But the idea that there's a Fed put, in other words, they're going to come in and save the market, he said no.
Yeah, and you would expect
they have
him.
done it in the past, though.
That's right. Yeah, you would expect him to say, well, of course we're not going to just step in and buy up assets when the market falls. But
they have.
do have a
The Great
history.
Financial Crisis really started that.
Yeah, you saw that with the financial crisis. Then they did it again with COVID as well. And so if things do go bad enough, I do think that they would intervene because they do have actually 3 mandates by law. It's maximum employment, stable prices, and moderate long-term interest rates. And I think they view that third one, they don't like talking about it that much, as being financial stability. So if there's financial instability of some sort, disorderly markets, then they would probably step in. That's what they did even coming out of COVID with, do you remember Silicon Valley Bank?
Oh, sure,
that seems like an
course.
eternity ago. You know, they did step in to provide support. So I think that they would step in. And in fact, one of the Fed presidents, Collins, she actually said, of course we would intervene if things get disorderly. So he can say there isn't a Fed put, but there is.
Yeah. And the last thing I want to get to is the VIX, which is a measure of fear and of volatility, did spike last week and has continued to come down and starting to settle down. If you look at a chart of that, it's getting to a more normal number, and that is an idea that we're starting to settle some things down. So over this next 90 days, if there is an advance in these conversations about tariffs around the world, I will bet that VIX comes down.